Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Happy to be back again, Jim.
Was there a bit of this scare in the gold market yesterday when prices took a dip?
Well, it happened so fast that I don't think there was really time. The moment the sphincters might have loosened, the thing bounced back. It was one of the sharpest little V-shaped, I'm not even call it a correction, fluctuation that we've seen in some time. The bigger question is, what does it mean? Why did it happen? What do we do about it? And I'm afraid I don't have sufficient clairvoyance to answer all of those. Two thoughts come to mind. One is that it was almost the same time that the bigger waterfall on the previous day happened. So it could just be that there's some seller somewhere that was hitting the market at the same time each day with sell bids on some gold. But the big sharp one yesterday also coincided with the beginning of Trump's talk at the economic forum there in New York. And so it could be that people thought he was going to rock the boat, but the sell-off happened right before he started talking, and this agreement back up again came, at the beginning of his remarks, where he really didn't have time to say anything too substantive one way or the other. So I don't know. Maybe it's all noise. But I'll tell you one thing. I had been looking to the 1450 level, which was soundly breached yesterday, as a potential trigger, and I have a shopping list of stocks in the gold and silver space I want to buy. And I was thinking that breaking 1450 might bring them in reach, but it was really peculiar. The stocks really held up quite well, at least the better ones, the ones I want to buy. They didn't go anywhere. I was actually quite disappointed. We got this big fluctuation, and nothing on my shopping list came to me on my entry prices. So who knows? But I am watching that, and my technical friends say that there really isn't much support here other than 1450 being a round number. The real number to watch out for is 1420. So if there isn't a lot holding gold up above, 1450, and it could go down to 1420, maybe I'll still get my stink bids filled, and I'll get to fill out that shopping list of mine before Santa gets to it.
Are the small cap gold companies enjoying any of this success?
Sorry, are any of the small cap companies enjoying the success? We just talked about a fluctuation to the downside, Jim.
Yeah, right. No, but I mean, overall, I mean, in the past year, minor, the junior gold guys, junior miners, period, were struggling, and they have for years. Have they had any recovery from this? Okay,
I got it. You switched gears on me. I was still thinking about yesterday's fluctuation. But for the breakout for 2019, there's a conventional wisdom that, when gold prices go up, people get interested in gold. They'll go to the big household names. Well, now there's only two of them, right? Now after the big mergers, we don't have Gold Corp and Newmont anymore. We've got Newmont Gold Corp, and we just have Barrick. And that, they would start acquiring the mid-tiers, and the mid-tiers would start acquiring the juniors, and you get this trickle down to the juniors some years later. And in a broad way, I think that's true. That does happen. But I don't think that the investors in juniors need to wait for that to happen, at least not the better ones. You've got companies out there that are delivering, companies that have significant, obviously high-margin discoveries in hand. And the price of gold goes up. The added value to those stories is immediate and obvious, and they respond too. And I've written about this. I don't remember off the top of my head the name of the article, but I've written about this because I've seen that this conventional wisdom is just wrong. Like after the crash of 2008, we didn't have to wait years for a trickle down. When gold came screaming back in December, even, gold ended 2008 up because it did its job, right? It was liquidity when needed, and then it rebounded as a safe haven. And it wasn't just the majors that benefited from that. In fact, as companies struggling with profitability, I think some of the juniors responded more quickly and with higher upside than the majors. And that happened immediately. I had a shopping list. Actually, I'm remembering this now as we're talking. I had a shopping list that I had written in November of 2008 after everything fell off a cliff. And, I published it in the then International Speculator that I wrote and worked for, and waited for readers to have their chance to buy, and prices started moving up before I got to them. And I said, after this bloodbath, maybe it's a dead cat bounce, I'll wait. And they just kept going up and up, and a lot of those stocks got away from me. Point of the story is, no, I don't think we have to wait for the majors to benefit first and then for it to trickle down, at least for the better stories, for the juniors that actually have something of evident merit. I think they can benefit right away, and many of those are up this year with gold and silver. No big surprise.
Now, I think in British Columbia, we did have a gold and silver mine that was finally approved. How hard is it to get a new mine up and running, no matter what it's producing?
It's funny that you should ask that one, because I just interviewed the assistant deputy something or other in the Ministry of Mines and Energy. It's a very long name for that ministry up there in BC. And he happened to be, this assistant deputy happened to be at the New Orleans Investment Conference that I just attended. And this is a question on a lot of people's minds. People are worried about the NDP, let alone the NDP and a green coalition. It sounds kind of scary for investors. And BC has this wonderful endowment. People want to know what's up with BC. So I asked them, really point blank, what do you tell investors who are worried about the NDP? And he said, this government has, depending on how you define it, already permitted 5 to 10 major new projects. So clearly BC is not closed for business. He also pointed out that this government, this NDP government, a green coalition, sent him to the New Orleans Investment Conference, which is very resource oriented, to spread that word, that BC is open for business. So I'm kind of taking a government bureaucrat at his word here in saying this, but I don't think he would just make that up. So am I suddenly an NDP fan? No. But I think it would be excessively cautious to stay out of BC plays over concern over the current government. Until they start shooting things down left and right and we see major moves against mining in the province, I just wouldn't worry about it too much.
And of course, maybe the Greens are supporting it because they know the second they say no to the NDP, the Greens lose their power in the legislature as well.
I'm not going to comment on Canadian politics, not being a Canadian. It would seem arrogant and not my specialty. But I will say that the other thing, and this was touched on in that interview, by the way, if anybody goes to independentspeculator.com, this is available for free in the Speculator's Digest area. And it's recent, so it should be one of the recent links there in the Speculator's Digest, this interview with this guy from the ministry up there in BC. But anyway, one of the things that came up was the pine beetle. And it's funny because that was big news a couple of years ago, the spread of this pine beetle plague. And it kind of went away. It's not something people talk about anymore. But he pointed out that it takes a while for these things to kill the trees, and it takes a while for the kill to maximize and the impact to be felt. And he says that that's really starting to happen now. There's a major fall off expected for the logging industry in BC, which is a major source of revenue there. And that's imminent. And therefore, the people in government are well aware that the province needs jobs, and the makeup of those jobs is shifting. Therefore, mining is important.
I think on the good news front with the pine beetle, we did have a very cold winter, and that kills off the beetle. The problem is, for the last 30 years, we haven't had cold winters. So the beetles just
perhaps
on.
So, but as I understand it, the damage is already done.
Yes.
Once they, I don't know if they eat the bark or what they do. I'm not
they clog up
bug expert either.
Yeah,
Entomologist.
Yeah, they clog up the sap in the tree so it slowly starves to death.
Well, there you go. So if the damage was done over the last few years, and if it takes a couple years for the tree to starve to death, that fits with what the deputy minister or assistant deputy minister was telling me. But by the way, before we go on from there, I want to rewind the conversation for a moment to something we touched on earlier about, the question about the majors first. There is something specific to current market circumstances about that, and that is that, whatever the fluctuations of gold right now, Q3 2019 was a fantastic quarter. For anybody that was making money or marginally making money, making good money, their margins went way up in Q3. And we've seen, we're in earnings season right now for the producers, and we've seen some terrific beats, like Agnico Eagle is one of my favorites to cite. And we've seen other companies that had trouble, but still managed to deliver because of the higher gold prices. And Pretium would be an example of that. They had major trouble with 2 whole stopes. One of them's hung. It's still there in the ground. Can't produce it. And they still managed to deliver to the bottom line because of higher gold prices. So that's extremely bullish. And okay, we're down to 1450. Well, that's still way above the 1300 prison that gold was languishing in for years before this. So I think a lot of these companies, the producers, the bigger companies, are going to have a great 2019. And each quarter that holds up and they outperform, the more interesting that becomes to investors around the world. And if the broader markets were to shake, everybody seems to think, oh, it's happy days again on Wall Street. The Fed's easy money policy is staying put. So yay, mainstream equities. But there's so much scary stuff going on in the world that could easily reverse tomorrow. Who knows when the whole China trade deal optimism blows up or whatever happens. And I'm not predicting that. I'm not telling everybody, oh, Wall Street's going to melt down this fall. In fact, a melt up looks more likely to me right now. That could change. All I'm saying is that if there is bad news and the broader markets are running scared at a time when the gold miners or gold and silver miners are delivering above guidance, they're beating when everybody else is missing, that could really attract a lot of attention to the precious metal space.
We'll have more with Lobo Tiggre right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, you were at the New Orleans investment conference. What was the buzz there? What were people excited about?
This question comes up a lot. I'm not sure that mood of the conference is an investable data point, but people do ask. So I'll say the overall mood was certainly less grim than last year, but nowhere near as positive as you might think on a year where gold had a significant breakout. I think 2016 was substantially more upbeat than 2019, whereas the breakout in 2019 is substantially more significant than what happened in 2016. A curious inversion. In my view, whatever that may mean, about investor psychology out there, never mind all that. The reality, though, is that the equities have not benefited and risen as sharply as they did in 2016, while the metal has performed better. That makes the related stocks a better deal today than they were during the rise of 2016. The relative underperformance makes them a relative bargain. So, short version of that is no, it's not too late to get in on the breakout of 2019. And yes, the current volatility and fluctuations, I think, are creating buying opportunities. Now, since I'm already invested, I have set stink bids at fairly low prices because I want to average down aggressively if I can. And, the cards that we see on the table before us now suggest that's entirely possible. This 1420 number, for example. But if I was new to the space, or if I had held off, or I was once bitten, twice shy by the 2016 rally, not sure that 2019 would hold up, I would not be waiting. I would be buying first stakes or tranches, if you will, up there in Canada in the best stocks that I like now, and then look to average down after that.
Is there a generational gap in what people want to put their money in? As in millennials, like things
right.
that they can trade on their phone, like cryptocurrencies, and older people like gold because they can store it in a sock.
I think our readers all have an answer to that question. So let me just slip beyond the obvious and move ahead to, I think that's changing. I think the idea that Bitcoin is the new gold, or the old gold is dead and gone, I think that's silly. I think the average young lady still wants a diamond ring for an engagement set in gold, not palladium or tellurium or some energy mineral. We've got thousands of years of gold and silver being not just safe havens, but monetary metals, and that doesn't go away. And young people grow up and they realize that. I've also made the case that if you look at the games young people play, in a large number of them, I don't have numbers, so I can't say for a fact that it's the majority, but I could maybe say the majority of the games that I have played with my children, gold is actually money in these games, or gold and silver. Or if it's something science fiction-y that isn't actually gold, it's gold colored. It looks like gold. So I don't think it's entirely true that younger generations are completely alienated from gold. And as they mature and have the finances to become players in this space, I think like everybody else, they have the same concerns. They look for yield, they look for safety, maybe the one difference, the one thing that could be a source of gold bug optimism, if you will, is that this younger generation, I think, is much more suspicious of fiat currencies and authority and old institutions in general than the great generation or the generations in between. The whole popularity of Bitcoin started from the fact that governments couldn't print it. Right? It was independent from any state. And at least in theory, it's limited in quantity and it was inflation proof. The fact that this became such a huge, I don't want to call it a fad and offend people, but the movement into this based on this logic and this, appreciation of the robustness against inflation, at least on the part of government in this space, I think that's very telling. And as these younger people, mature and come into the world of finance, I think that attitude is nothing but good for the world's longest running monetary commodities.
Now, a lot of us grew up with the idea, the government will look after you. Do you think younger people have learned, no, the government probably won't?
I'd say the jury's still out on that. I think a lot of them are once bitten, twice shy. They're very suspicious of government agencies. They're, particularly under Trump, younger people will be very suspicious of the EPA. The Bitcoin thing shows that they don't trust the Treasury or the Fed, that sort of thing. But at the same time, they like free stuff, and clearly candidates that promise them free stuff delivered by the government are doing very well. So I'm not sure that that's an all or one way or the other kind of answer for them. They may be a little bipolar on this.
We'll have more with Lobo Tiggre right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, are people anxiously awaiting to see what's going to happen with uranium?
Well, certainly the uranium bugs are. I don't know that we could generalize to people around the globe waiting on pins and needles. But I don't know how much of the backstory we're going to get into here, but there was a Section 232 petition to the Department of Commerce, handed it to Trump. They actually recommended that Trump protect U.S. domestic uranium production. He punted, set up a working group, which has already had an extension, a 30-day extension on their deadline to report back to Trump. The new deadline is thought to be tomorrow. So there could be a catalyst here. Now, this is specifically about U.S. uranium production, and most uranium is produced elsewhere around the world, but that's sort of the point. The U.S. needs uranium for the reactors that generate about 20% of its electricity, and it imports more than 90% of its uranium. So there's something to this issue here. Now, exactly what will happen, nobody really knows. It could be nothing. But the way I see this, it's one of these cases of asymmetrical risk. If absolutely nothing happens, if the working group comes back to Trump and says, you know what, let's let the free market handle this. We import uranium, yes, but it's mostly from our good friends in Canada and down under, so we're not worried about it. Just let it go. And Trump lets it go. Even that would actually be good news, because the U.S. utilities are still major buyers. We're still one of the biggest nuclear powers in the world, or power producing countries in the world. And if you're a U.S. utility buyer and the rules might be about to change, you're going to be reluctant to sign any new contracts. So a lot of us who've been watching this think that a lot of the buyers have been held off the market during this whole protracted petition and decision process, now this working group. And the resolution of this, even if it's, nope, don't need to do anything, should at least make the questions go away and bring those buyers back to the table. So we could actually see a near-term response in uranium prices if the thing just is resolved. And I'll mention as a data point that when Trump decided to create the working group and decided not to support U.S. uranium production back in July, spot uranium prices jumped 5% the next day, the next trading day. Didn't hold, but there was an immediate response to that action. So we could see the end of this whole question mark have a positive impact on uranium. We could also see the U.S. decide to bolster U.S. uranium production, which would have an obvious and immediate positive impact for the U.S. producers or the U.S. explorers and developers that could benefit. So in terms of things that are very near-term, immediately investable, again, I want to be very clear. I'm not promising that if you buy uranium stocks today, you'll make a ton of money tomorrow. I am saying that something could happen tomorrow which could produce immediate gain, and it could be very positive going forward from there. It's a maybe, but it's a very near-term maybe. So if you have money that you can afford to speculate with and take a risk on swinging for the bleachers, this could be it.
Bloomberg is reporting that oil production, which also probably goes along with oil usage, is going to plateau in 2030 and then rapidly decline after that. Does that tell us that there will be a bigger demand for metals used in batteries for electric vehicles?
That's the obvious implication, and I think that there are a couple important things to tease apart here. One is that these kinds of projections are always based on models and assumptions about the rate of adoption of electric vehicles and other changes in the marketplace. And those are almost always wrong. Sometimes they're too aggressive, sometimes they're too conservative. So one thing you can almost guarantee is that whatever they say it's going to be, that's not going to be it. There's also, I guess I tend to be on the side that's actually more aggressive. I think that China, and for one, really understands that they have to do something about their pollution problems. India is not far behind. They just handed out, it was like over 1 million face masks to people because of the pollution crisis in Delhi last week. So, these are serious issues. and these governments are not limited by the Bill of Rights. If they want to lean heavy on pushing people into adopting electric vehicles and cleaning up their air, then they can and they will. This could make things happen much faster, especially in the growing markets for autos. So I'm not necessarily telling people that will happen. I'm saying there's a very good potential for those type of estimates to be very conservative. We've already seen Tesla, for example, consistently deliver far more, far quicker, and push this envelope faster than anybody really believed possible. Now, whether they make any money, that's another question. But Tesla has advanced this whole ball of wax farther and faster than anybody thought possible before they did it. So I'm a little bit more aggressive than those projections. Now, the other thing, though, is that doesn't mean that all the minerals and metals related will necessarily go up. Some of them are not particularly rare. We call these lithium-ion batteries. But as I'm sure most of your audience knows, there's more nickel and manganese in these batteries than lithium, and cobalt is another key component. But while nickel is in a supply crunch, and potentially in the years ahead a very serious supply crunch, and cobalt maybe, lithium is not rare. So if you think, lithium batteries, we gotta buy lithium. Well, that's too simplistic. Right now, there's just a report out that, you can see this on mining.com. I tweeted about it. By the way, you can follow me. And my handle on Twitter is @DueDiligenceGuy on Twitter. And I keep up with this sort of stuff on a daily basis there. So if you want your Lobo Tiggre fix in between these excellent interviews with Jim, check us out on Twitter. Anyway, I tweeted about this, and there's just a report now that Albemarle and SQM, these guys, they're producing way more than is needed right now. It's something like a 5% surplus right now. And if the global economy cools, despite me saying that China and India may push for faster adoption, if the global economy cools, they'll cool. We could see that oversupply get worse before it gets better. So, long story short, you can't just rush out and buy all the battery metals because it's clear that the world is shifting away from burning oil in engines. I do think that is a paradigm shift. I do think that's never going backwards. I think the days of the internal combustion engine are numbered. When companies like Porsche come out with electric cars and you got electric trucks now, electric delivery vans, all this stuff, the writing is on the wall. That's definitely a one-way transition, and it is bullish for the right minerals, but you have to look for the ones that are in short supply.
Yes, and we will see batteries being used in the sky. Harbor Air in Vancouver, which does flights of 45 to 90 minutes in float planes, they're converting their fleet to electricity.
Yeah, that's amazing to see that, particularly that application, where the technical requirements are so demanding, right? Weight is such an issue for an aircraft. You can't have these honking big batteries that you just put in a bus in the city streets, for example. They won't fly that way. But I also noticed that NASA just took delivery of their prototype electric airliner, and interesting stuff is happening there. The air taxis also, those flying cars like in the Jetsons. We all wondered, those of our generation, Jim, we all wondered when the year 2000 came, hey, where's our flying cars? This doesn't look like the year 2000 we saw in the movies. But here we are at 2019, and it's really happening. There are prototypes in the air now of sky taxis. And never mind all the self-driving cars and all that stuff. It could be very soon that we are living in a George Jetson-like world where we get in the buggy, push the button, and it flies off to wherever we want to go.
Lobo, anything else you wanted to talk about today?
Last thing would be tax loss season is coming, and I do want to remind your listeners to watch out for that for buying opportunities, and also remember that tax loss season is, it's not just about what's underwater. It's also about what's doing well, and if people are doing well on their equities at large, then that increases their desire to take tax losses. So you could have a story that there's really nothing wrong with it, but the share price is down for the year, And they could see vicious tax loss selling just because people have such a great need to offset gains with losses. And the other thing to keep in mind is that your own individual profit or loss on a stock isn't the determiner here. You're trying to see whether a bunch of people are likely to take a tax loss this year or not. So you want to look at the stock chart and look at, is the stock down versus a year ago or over the course of this year, whatever your own entry point is. And for more on this sort of thing, I have lots of free educational material available through the Speculator's Digest at independentspeculator.com. And of course, for more specific guidance, I have my paid letters, which people are welcome to check out.
Lobo, thank you so much for chatting with us.
Thank you, Jim. Have a great one.
My guest has been Lobo Tiggre from the independentspeculator.com. You can find him on Twitter at Due Diligence Guy. He was speaking to us from Puerto Rico. If you have any questions for Lobo or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.